Good morning. We're at the midpoint of the trading week. Let's check the scoreboard and see how Monday and Tuesday signals are holding up as we set the stage for today. Welcome to the VIXShield Daily Market Summary, Morning Outlook for Wednesday, April 22nd, 2026. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. In this episode, we walk through the overnight developments, today's key levels, and exactly what discipline looks like on a hold day. The S&P 500 closed yesterday at 7,064. That marked a modest pullback of just over 0.6%. Meanwhile, the CBOE Volatility Index, known as the VIX, settled at 19.05. It climbed 1.11 points, or roughly 6.2%, from yesterday's close of 17.94. Its 5-day moving average sits at 18.59, so we are hovering just above that line in a state that still feels contained. The term structure remains in contango. That simply means longer-dated volatility is priced higher than near-term volatility. For iron Condor traders, this is the normal, favorable carry environment where time decay tends to work in our favor if the market stays range-bound. The dollar index rose 0.4% overnight, signaling some flight to safety. Bitcoin and Ethereum both pushed higher by 3 to 4%, which adds a mixed risk signal into the open. Gold slipped nearly 2%, while crude oil surged more than 8%. Taken together, these cross-currents paint a picture of selective risk-taking heading into Wednesday. And behind that market snapshot, we find several threads that could shape the entire session. May 2026 inflation readings are drawing fresh attention because they may tilt the Federal Reserve's next rate decision. Analysts are watching whether sticky prices keep the Fed on hold or open the door to a cut later this year, which brings us to commentary around Fed policy itself. Several outlets note that the central bank's path could decide the market's next big move. Kevin Warsh, the nominee some see as a potential Fed chair, has been making headlines by pledging independence and insisting he is no one's sock puppet. That tone matters. Markets price in the risk that a more hawkish voice could slow any easing cycle. Meanwhile, fixed income professionals are publishing their second quarter perspectives, reminding us that bond yields and equity volatility often dance together. Geopolitically, the focus remains domestic. Trade policy uncertainty and central bank signaling continue to keep implied volatility from collapsing. The economic calendar adds two important markers. The Chicago Fed National Activity Index crosses the tape this morning, and traders are already positioning for the next Federal Reserve interest rate decision later in the week. These are the numbers that could change everything. Step back for a moment. Overnight futures have been quiet, no dramatic gap. Yet the combination of inflation data, Fed speculation, and commodity swings leaves us in a classic midweek checkpoint. The question is whether today's releases will push the VIX back above 20 or allow it to settle into the upper teens. That single line remains the gatekeeper for new positions. Now let's look beneath the surface at volatility. The VIX sits at 19.05 after yesterday's 6.2% rise. It is still below the critical 20 threshold, but noticeably above its 5-day average of 18.59. Realized volatility over the last 10 days has been running at 14.24%, which tells us implied volatility is still carrying a healthy premium. That premium is exactly what income strategies hope to harvest when conditions line up. Our expected daily range indicator came in at 1.29%. The entry gate is technically met on the EDR side, yet the overarching VIX rule overrides it. When the VIX is above 20, we hold all tiers. Yesterday it closed below that line. Today's open will tell us if we stay in caution mode or regain the green light. The term structure, spread between the VIX and the 3-month VXV, sites at 2.46 points. That confirms normal contango. For those of us who sell premium, this is the calm, healthy state where theta decay can do its work without violent vega shocks. Now the strategy insight for today. We begin every morning by checking 3 gates: the level of the VIX, the expected daily range, and our active ALVH protection layers. Right now, 3 out of 3 hedge layers are active. The short-term spike guard, the medium-term wave shield, and the long-term endurance hedge are all in place. That gives us a built-in buffer while we wait for clearer entry conditions. The theta time shift mode is forward. With 7.2766 temporal reading well above the 0.94 threshold and the VIX above 16, the instruction is to roll existing structures out to 7 days to maturity. That extension offers potential vega capture between 45 and 80 cents per contract. It is a measured way to adjust without forcing new risk. VIX at 19.05, elevated but still below 20. Conservative tier is check conditions. Balanced is yellow. Tradable with caution. Aggressive is red today. Blocked per our VIX rules. We do not push the aggressive button when volatility is running this hot. Therefore, the decision is hold. Had conditions been fully met, the conservative iron Condor we would have evaluated might have targeted short strikes roughly 1.7 times the expected daily range away from the money, looking for a credit near 1.2% of wing width. The balanced tier would have tightened that distance slightly for a higher credit, while the aggressive version would have pushed even closer. But those are hypothetical structures only. The VIX rule is clear. When it trades above 20, we step back. Every hold day that keeps us out of a potential loser is itself a form of alpha. Discipline compounds. That brings us to the discipline lesson for this Wednesday checkpoint. Midweek is when we truly test whether Monday's optimism and Tuesday's follow-through were built on solid ground or wishful thinking. Today the scoreboard shows a VIX that has climbed but not yet broken the 20 handle. The move reminds us that volatility can expand quickly on Fed headlines or inflation surprises. Our job is to respect the gate, protect the 3 active ALVH layers already in place, and use the forward roll to manage existing theta exposure rather than chase new trades. Looking ahead, watch 2 things in today's session. First, any sustained push in the VIX above 20.5 would confirm the hold and likely keep all tiers blocked through tomorrow. Second, a quick retreat below 18.8 on light economic data would begin to reopen the balance tier for careful consideration. Pay close attention to the Chicago Fed number and any fresh comments on the Fed's thinking. Those catalysts can flip the volatility picture in a single hour. If you found today's summary valuable, share it with a friend. Both of you will receive 14 extra days of free trial access to the full VIXShield podcast and signals. Your personal share link is waiting for you in your member dashboard. This market summary is brought to you by VIXShield, your protection against daily uncertainty. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution, signals only. Past performance is not indicative of future results. Today is a hold day. The VIX entry gate or EDR filter was not met. No new iron Condor positions should be opened. This is an educational example of how the entry rules protect capital during unfavorable conditions. This is VIXShield, your daily protection against market uncertainty.